Good afternoon, everyone. Today I'm chatting with Matt Simpson from Brazil Potash. In today's interview, we discuss tariffs and the impact they could have on potash markets, as well as Brazil Potash, which is a really interesting company because it currently trades around $100 million market cap. And as Matt tells us in the interview, he's projecting that this project will do $1 billion a year of EBITDA, basically be a major contributor to Brazil's economy. So I think that there's a really interesting story, and this is an interview you're going to want to watch. All right, everybody, enjoy the show. Matt, thanks for joining us.
Great to be back, Steve.
So we've got talk about tariffs going on right now. If you haven't checked your phone or checked the news, which I'm sure you have, um, this is probably going to have some impacts on the potash market, I think. Now, you are involved in the potash market. What impacts do you think that this is going to have?
This is going to have a huge impact not only on the potash market, but on everyday grocery prices, especially for U.S. citizens. The U.S. imports about 10.5 million tons a year of potash. 85% of it comes from Canada. And the tariffs on potash are still a bit to be seen. Originally, we were talking about 25%, but then there was a potential reduction because a lot of the farmers were absolutely screaming to 10%. But even at 10% is going to have a flow-through effect onto everyday grocery prices.
So the first time we talked was actually because you were involved in, I believe you're still involved with a company in Ukraine. Now, the reason I bring this up is that I assume that you're following closely what's happening in terms of global trade with Russia and Ukraine. Now, Russia and Belarus, as I understand it, are two of the larger potash markets that are out there. Are you expecting that potash could be an item where we see sanctions reduced?
Well, again, we already have seen Trump concede from 25% to 10%. We'll see what happens later on today in terms of the final percentage that's applied. But when you look at the potash sector, you're correct. I mean, the largest producer in the world, about 40% of global market share is Canada. About 22% of seaborne trade comes from Belarus and about 20% from Russia. And Belarus is sanctioned by the US. So right now, the US can't buy from Belarus. They could buy from Canada or Russia. But if the Americans decided not to buy as much potash from Canada, the big issue that they're going to face is the inland supply cost. Because right now it's very efficient from Saskatchewan using inland railroads to transport potash to the major farming belts in the United States. And if you want to displace that, your only option that has enough capacity, and even that would be a struggle, would be to source it from Russia. But then you'd be facing massive inland transportation costs that aren't currently incurred by buying from Canada. So ultimately, I think, Steve, the farmers will continue to buy from Canada. They won't change because it's just not cost effective to do so, but they will pass that cost on.
So this is probably going to set up the conversation about Brazil Potash, which we're going to get into in a minute. But a lot of our audience, they hear about potash, they know effectively what it is. But I'm getting the vibe here from our previous conversations and just looking at some of the numbers that transportation is actually a really significant cost when it comes to potash. Why is that?
Well, when you look at potash, let's use Brazil as an example. You'll spend about $80 a ton to mine and process potash, but from there, you need to load it on a train and travel from Saskatchewan to Vancouver, about 1,700 kilometers. You then load it onto an ocean-going vessel. You go through the Panama Canal. You then have to wait about 30 to 60 days to get access to a port in Brazil. And all of that, plus the inland transportation into Brazil, is about $200. So you spend 2.5 times more on transportation than you do just on mining and processing.
So is potash is it does it require certain shipping containers? Is it just really large in size? Why is it so expensive to transport potash?
It's primarily just distance. It's because you're traveling somewhere between 12,000 and 20,000 kilometers. It's a bulk commodity, so it's transported much like what you'd see with other bulk commodities like iron ore or coal, where you use rail cars followed by large ocean-going vessels. So really, it just boils down to that. But the problem with potash that's very different than other bulk commodities is that it's irreplaceable. We all have to eat. So it's not a matter of whether you choose that you want to use fertilizer or not. If you want to have very efficient crop yield, then you need to use fertilizers.
Okay, so let's turn the conversation to Brazil Potash. It's the first time we've had you on to talk about Brazil Potash. What's the high level overview of the company?
So Brazil is the world's largest importer of potash. They consume about 14 million tons a year in a market that's about 63 million tons, growing at about 1.7% a year. So this is about a 20 to $30 billion market. And potash is one of the three main fertilizers used to grow food. So the other two fertilizers would be your phosphates and your nitrogen-based fertilizers. So if you ever bought a bag of fertilizer from a Canadian Tire or Home Depot, you'll have three numbers on the front, and that's NPK. And the potash is actually the K, the last number. So what makes Brazil potash special is that simply we're in Brazil, only 12 kilometers away from a major inland river that connects to the largest farming region in the country. So simply because we're in Brazil and everyone else is 12 to 20,000 kilometers away in Canada, Russia, or Belarus, our cost to extract, process, and deliver to a Brazilian farmer at $130 a ton is less than the over $200 spent on just transportation by everyone else.
So let's talk about the project that Brazil Potash has. How much money has been invested into it to date?
So to date, we've raised about 270 million and have invested about 250 million to bring the project to its current fully permitted for construction state.
Okay. And what sort of economics does the project have?
So potash projects typically generate around 8.9 times enterprise to EBITDA once up and running. So in our case, using central case potash prices from CRU, this project should generate about 1 billion of EBITDA a year for at least an initial 23-year period. So using those multiples, if we are trading in line with existing peers, it'd have somewhere around a potentially 9 billion market cap.
Okay. So um, right now, I'm not sure what the market cap of the company is off the top of my head, but it's significantly less than that, as I understand it. Let me pull it up here.
So it's 100
It's
million.
like yeah, it's like 100 million,
Yeah,
and
correct.
you're talking about a company that is looking at doing $1 billion a year in EBITDA. Um, pro let's dive into that for a second. So one of the first things that I'm kind of thinking when I hear that is, okay, well, how much more capex is going to need to go into this project to get it to production?
Sure. So the project does require 2.5 billion to build it out. To put that into context, we have already market sounded about 1.7 billion of debt. We do have a royalty option agreement with Franco Nevada, the biggest royalty and stream provider in the world, about a 30 billion market cap, where if they pull the trigger, they'll bring in roughly around 150 million. We expect to carve out the railroad, the power transmission line, which will carve out about 200 million. So that leaves about 500 million of equity that we need to raise. So clearly raising 500 million compared to a market cap of 100 million is extremely difficult. And the plan is not to raise that money at the traded level. The plan is to speak to sovereign wealth, to pension funds, to life insurance companies, and have them come in with a sizable investment at the asset level in Brazil. So we'll carve off a certain percentage, let's call it 30-ish% of the asset, and based on fundamentals, be able to justify a substantively higher valuation than what the company trades at today.
So you mentioned Franco Nevada, and there's probably not a better way to make it sound like you guys are a credible company with a great project than when we hear that Franco got involved. Obviously, Pierre Lasson's a legend, and they don't just get involved in any project. I'm curious, how involved are they with the project?
Well, Franco Nevada was the anchor equity investor in our IPO, so they put in 10 million US at $15 a share only at the end of November of 2024. So that was based on extensive financial, economic, social, environmental, technical due diligence on the project that they take quite seriously before making an investment. And then separately to that equity investment, they invested a further 1 million to acquire an option on a 4% gross revenue royalty that targets a 12.5% internal rate of return.
Okay, so another question that I'm sure we're going to get from our audience about the company is the cap table. What can you tell us about the share structure if I'm an investor and I want to have comfort in this idea that I think, okay, this sounds like a pretty big project. I like what I'm hearing, but how do I know that I'm not just going to get pounded if I buy shares open market?
Well, the share cap table is pretty tight. We have 38 million shares out basic, 48 million on a fully diluted basis. Roughly 65% of the existing shareholders are locked up for 1 year. There is an accelerator where half of those shares could become free trading after 6 months from the IPO, so call it around end of May of this year, should the share price exceed $18. So there's a good chance that all the shares are going to be locked up for a 1 year period of time. Out of the free float, it's largely retail. There's about 7,000 retail investors that we brought in about 3 years ago from a Regulation A offering. And largely what we're seeing on why the share price declines so much is a lot of those Reg A investors selling out of the deal, rightly or wrongly. I think they could be thinking that when they put their money in at $4 a share and did a 4-to-1 rollback, they might not appreciate that that meant that their shares are now at $16 and the IPO was done at 15. So you might have some people that could be upset that we IPO'd for a little bit less than what they invested in. And you could have other people that are high-fiving each other thinking that all of a sudden they're making it like bandits where their $4 is now 15. Either way, Steve, what's important for people to know is that since the IPO, we've only significantly improved the story. Probably the most important thing we did, you say Franco Nevada is an absolute icon, and that's very true. We also brought on a gentleman named Mayo Schmidt as our executive chairman. And for those people that aren't familiar with Mayo's name, Mayo is the founder of a company called Viterra, which he took from about 50 million to 850 million of EBITDA, expanded into 44 countries, and then sold that company to Glencore for 7.6 billion. He then joined the board of a company called Agrium that was merging with Potash Corporation to form what's now called Nutrien. And Nutrien is the biggest market cap supplier of fertilizer in the world. And Mayo was the executive chairman, followed by the CEO of Nutrien. And he's also the guy that IPO'd Hydro One.
Wow. Okay. So you guys have a hitter on your leadership team. I obviously already knew that, but I still think that is insane that you guys got him. When we're looking at just the high level of it, the potential for $1 billion EBITDA. You've got a guy who was chairman of the biggest potash company in the world, if that's what I'm hearing correctly. And it's a trading at $100 million market cap. It just sounds certainly interesting, something that I think our audience, at the very least, are going to want to keep an eye on. So let me wrap it up with this question here. If I'm watching the story and I'm hearing what I just heard, but I want to sit back and I just want to evaluate how things are going before I hop in. What am I looking out for over the next year?
So I guess a few things. I think most importantly, it's important for everyone to know that I'm buying shares. Mayo's buying shares. Everyone can easily check that on SEDI and see that the insiders are actually buying. So we think this is an absolutely ridiculously low valuation right now. Looking ahead, lots of massive milestones being delivered this year. In addition to the offtake agreement we right now have with Amaji, which is one of the biggest soybean producers in the world, we also recently announced a memorandum of understanding with a group called Keytrade for 1 million tons of offtake. We expect to convert that to a binding commitment. There's a third offtake that we also expect to sign in the coming months. These offtake agreements are really important because they're helpful to then lock in the debt for project construction. We also expect to announce the carve out of that 200 million for the power line for the project. We've even started some of the early earthworks and vegetation suppression on the project. So there's lots of big catalysts that are being delivered over this year.
Well, Matt, thanks very much for hopping on here. I think that this is probably one of the more interesting stories we've talked to this year. I say that in all sincerity. And I hope that you'll keep coming back on here in the coming quarters to update us as you continue to execute on your strategy.
Thanks for having me on again.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks for watching, everyone.